The Australian dollar closes at three-year lows as trade wars and rate cut calls hit sentiment. The sharp deterioration in trade relations between the US and China in the second week of May that saw Trump raise tariffs on $200 billion of imports from China from 10 to 25%, and his order to his trade representative Robert Lighthizer to start work on raising tariffs on all remaining imports was one factor pushing the Aussie dollar below 70. However, the other was RBA guidance in the Australian economy. A week ago, the RBA cut its forecast for growth and inflation to barely acceptable levels despite assuming 2 rate cuts in its forecasts. In the RBA's May 7 policy statement, the board noted they would be paying close attention to developments in the labour market at its upcoming meeting. Clearly then, it would not have been pleased to see the unemployment rate in Australia pop up to 5.2%, even though there may have been some comfort in another month of robust job creation, with the headline 28,000 boosting annual jobs growth to 2.6% and full-time jobs to 2.9% on the year. However, rate cut expectations were reinforced by a worrying slide in the employment index of the April NAB business survey and another quarter of sluggish wages growth. And this weekend's Australian federal election adds to the uncertain outlook for the Australian dollar. Now, polls point to an 80% chance of the coalition government losing power to Labor after 6 years, but perhaps relying on crossbench support in the Senate, adding to likely uncertainty early next week. Tuesday next week sees the RBA minutes from the recent policy meeting released, and RBA Governor Lowe speaks on the economic outlook and monetary policy at the Economic Society of Australia in Brisbane on Tuesday as well. Given the topic and the RBA's assumption of 2 rate cuts in its forecasts, traders will be watching this speech very closely for any guidance on how quickly rates will indeed be cut, with money markets fully pricing a move by the RBA in July. Now, the Australian dollar has fallen 2.2% so far this month and is the worst performing G10 currency over that period. However, it's not all been bad news for the outlook. Commodities are normally a potent driver for the Australian dollar, and the price of iron ore has continued surging towards $100 per tonne, a level we've not seen since May 2014. Some analysts have been talking about a move through 100 to 110 as stockpiles of iron ore in China fall as a result of the tailings dam collapse in February in Brazil, slashing global supply. And the Trump administration appeared to step back somewhat on its aggressive trade stance seen the week before last. Treasury Secretary Mnuchin confirmed he will be going to Beijing in the near future to continue those discussions, and Trump will meet Xi at the G20 meeting in Osaka in Japan, June 28-29. Trump was also due to make a decision on auto tariffs by the end of this week, though it looks likely that any action will be delayed for up to 6 months. However, the US did move this week to blacklist Huawei, a move that bans the company from acquiring components and technology from US firms without government approval. The ratcheting up of tariffs on Chinese goods, the retaliatory actions from China, and this action on Huawei has materially hardened the dialogue between the two superpowers. Consequently, risk and growth sentiment are likely to be suppressed in the near term. Now, clearly, Chinese and US trade relations will remain a focus for the markets this week, though the minutes from the May 1 Fed meeting will be released on Wednesday, and any discussion around the transitory nature of the recent weakness in inflation will be very closely watched by traders too. Finally, note European elections will take place next Thursday, and voters will turn out in the UK to vote against the major party candidates as protest over how Brexit has been handled increases. That saw rising pressure saw UK Prime Minister May confirm last night that she will set out a timetable for her resignation in June and the election of a new Conservative Party leader. These are all factors we'll talk about in next week's Markets Update.